Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another ram-jammed daily cryptocurrency market update. Of course, we know today is the day the Fed make the decision on the next rate hike, or pause, or what they're now calling a pause, a skip. We've shown you what happens typically to the likes of the S&P, which we have upside targets for, on the back end of a pause in rates. And we'll go over that. We'll be talking about yesterday's CPI, of course, came out low as expected. And then we'll look at the probabilities. We'll look at Europe, who's also looking to kind of, even though their inflation is elevated, they're obviously in a worse economic situation. And they are looking to maybe bring rates to an end. So we're entering this very interesting period where we know what's driven the markets has been rates. Rates have been driven by inflation. We're seeing inflation come down significantly across the board, not perhaps to where normalized rates are or whatever you want to call them. But it's very interesting that we've gone from an aggressive monetary policy into what is now looking like quite a loose one. Or loose is not the right word, a less aggressive monetary policy. It's going to be interesting to see how the markets react. So we will be looking at all that towards the end of the video. Right now, really at the forefront of the crypto space is, of course, the SEC and their persecution of this industry and their unfair treatment. Yesterday was an absolutely huge day, and we did a whole video on it. If you didn't see it, please go and check out my last video where we looked at the Hinman documents that have now been public. These were brought up because, obviously, the SEC has accused Ripple, Brad, and Chris of essentially selling Ripple as a security. And the Hinman documents very clearly showed that actually Ethereum did the exact same thing under their own, the exact same thing that Brad, Ripple, and Chris did in regards to Ethereum and the 70,000 Ethereum that Vitalik sold to double their runway in terms of, in terms of their budget. And they raised funds through selling Ethereum. And there's this whole thing. So this isn't me hating on Ethereum, but there was a lot of interesting things that came out of the Hinman documents. Like, for example, the fact that there was concerns raised at the time of Hinman about this regulatory gap, this other category that would cause regulatory uncertainty, which is what is literally happening right now with the SEC and the CFTC not quite being able to decide who has jurisdiction over this. And I actually think the SEC is going to court to try and figure all this out. And basically, it's a power grab to see what they can get and what they can be allowed to regulate. So I think there's a huge silver lining in all this. I do believe that Ripple are going to win the SEC lawsuit. And actually, the rebellion is fighting back against the emperor right now. It really is. I mean, we're going to look at a number of things. We're going to be starting off, of course, with a clip that I was tagged in very generously from Pedro. Thank you very much, Pedro. And this was Torres's questions, witnesses at hearing of the future of digital assets congressional hearing. This was yesterday. I've watched the whole thing. This was a great clip. And it really sums up the kind of sentiment right now and the what would be the right word? Lack of faith and almost disgust with what Gensler and the SEC are doing. And he actually brings up some amazing points here. We know the contradictions that exist. The Hinman documents really more than anything showed a lot of those contradictions, showed that Ethereum was essentially given a free pass. And then you've got this whole ETHgate thing, which we looked at yesterday, so I don't want to go too much into that. And then we'll be looking at a number of other news, like the fact that Binance adds former SEC enforcement co-director to its legal team. SEC asked for more time to respond to Coinbase calls for crypto clarity, and then we're going to get into all the macro stuff. Let's start off by playing this clip, guys, and I will sort of jump in when I need to as we go through it.
Thank you, Mr. Chair. Before we get to the substantive question of what to do with crypto, we as a country have to answer a more fundamental question. Who among us should get to decide the future of emerging technologies like crypto and blockchain? Should it be Chair Gary Gensler, an unelected bureaucrat who answers only to himself? Or should it be the United States Congress, whose members are elected by and therefore accountable to the people? And so, Mr. Allaire, do you believe, as I do, that an act of Congress would be the most democratic means by which to decide the future of digital assets?
Thank you for the question, Congressman Torres. I do agree, and in fact, the Presidential Working Group specifically asked Congress to act urgently on this matter over a year and a half ago. And so I believe it's critical that Congress does take ball control here.
There are crypto companies like Circle that strive to be compliant with the law, and then there are crypto companies that seem intent on willfully evading the law. And yet Mr. Gensler appears to see no difference at all between the two. He treats them all as one and the same. His enforcement has been indiscriminate in nature, which brings me to the lawsuit against Coinbase. Mr. Garrison, if the SEC sincerely thought that Coinbase was operating an unregistered securities exchange, then why on earth would the SEC approve Coinbase as a public company? Or why would the SEC not at a minimum require Coinbase to disclose its status as an unregistered securities exchange as a material risk to the investing public? Do you see a contradiction between the SEC's 2021 approval of Coinbase as a public company and the 2023 enforcement action against Coinbase?
I do see a contradiction. As part of the filing review process, taking a filing effective under the securities rules requires a public interest finding. Typically, a public interest finding, it's a very loosely defined term, but you might argue that a act by the company that is inconsistent with securities laws what might be not in the public interest.
And I want to interject, the SEC made the following statement in the Coinbase lawsuit. It said, declaring effective a Form S-1 registration statement does not constitute an SEC staff opinion on or an endorsement of the legality of an issuer's underlying business. So when it comes to S-1 registration, the SEC is asserting that it has no opinion on whether an issuer is complying with the very laws that the SEC is charged with enforcing. That strikes me as strange. It's almost as if, suppose the SEC would approve the mafia as a public company and then say, but we have no opinion on the underlying legality of the business. As a layperson, that just strikes me as absurd. So
I actually think what seems like an absurd comparison there with approving the mafia as a business, it's kind of the same thing, right? It is like approving the mafia as a business and then going after them for the things that that business does, although you've approved it to become essentially a security, a public company, knowing that beforehand. Again, with the Hinman documents, the main thing that I think has really been brought to the forefront is just the complete contradictions across the board here. They haven't got a clue. And this is actually why I think they're going to the courts to try and work all of this out. Because Hinman is contradicted, and the whole Ethereum thing is very sketchy. A lot of what's now being brought forth today. And actually a lot of things that were, and you're allowed to, as an enforcement agency, change your opinion, of course. But a lot of what was initially said is no longer applicable. Let's go ahead and continue with this clip. I thought it was a great clip.
am I missing something, or?
No, I think that's where the public interest finding comes in, and I think perhaps the other side of that coin is that
No pun intended, right?
yes, is that you don't want the SEC to take responsibility for what is in any filing, which is I think what's getting at some of that language is getting at as well.
In an interview with the New York Magazine, Chair Gensler said that everything but Bitcoin is a security. Of the more than 200 listings on the Coinbase exchange, the SEC lawsuit only identifies 13 as unregistered securities. 13 out of more than 200 seems to contradict the Gensler doctrine that everything but Bitcoin is a security. Do you see a contradiction there?
Yes. It would be nice to have clearer insights into what tokens, what digital assets the SEC believes are securities instead of seeing them piecemeal through enforcement actions.
The digital market structure discussion draft provides for a safe harbor, and I see the need for a safe harbor that protects good faith crypto companies from arbitrary and capricious enforcement actions. But what about bad faith crypto companies? How do we prevent bad faith crypto companies from exploiting the safe harbor to prevent legitimate enforcement actions?
So included in the market structure bill are the typical anti-fraud protections that exist in both the securities and commodities laws. So whether a digital asset is sold through the new SEC exemption, the SEC's robust anti-fraud authority would also apply there. And on the CFTC side, if a digital commodity was sold or manipulated in a fraudulent way, the anti-fraud provisions of the CEA would apply as well.
And then a quick question about the applicability of securities law to secondary market transactions. Has there ever been a single statute or a single rule or regulation or a single court case that expressly affirms that the Howey test applies to secondary market transactions?
No.
Are you sure?
To the best of my knowledge, yes.
Are you positive? Okay.
Gentlemen.
Interesting. Very interesting about the secondary sales. None of this makes much sense at all. The only thing I can think of is that, okay, Gary's got special interest that he's working for. We know that this is the case. Unfortunately, ladies and gentlemen, we live in a corrupt world. It might be news to some of you. If it is, it shouldn't be. But, you know, I can't help but feel like there's an ulterior motive to all of this. And it's not just about, you know, them. None of it seems quite right. And the contradictions here, we're hopefully going to get a number of individuals who are lawyers that do work in the crypto space specifically to come on the show and give us clarity. Because I'm not qualified enough to sit here and tell you that even though I think that many of these cryptos don't qualify as securities, I can't sit and say that's 100% a fact, because I'm not qualified. I don't deal in the legality of securities and commodities. Yes, we could argue the decentralization point, but actually that was argued, and that was the whole Hinman thing about, and this is what the industry has been working off, that if a network is sufficiently decentralized, who do you go after? Who can you penalize as that third-party intermediary that's, people are investing in, expecting them to generate profits for them? You can't really do that, because in decentralized, there's no one actor. There might be hundreds, there might be thousands, so on and so forth. But it's definitely going to be worth me getting some people on to talk about all this that are lawyers. We have the power as a channel of this size to do that, so we will be doing it. Number of other things on this, and then we'll move on to the macro, guys. All Republicans on the House Financial Services Committee sent a letter to the SEC demanding all Republicans on the House's Financial Services Committee sent a letter to the SEC demanding it resign its proposed amendment to the definition of exchange, which would stifle innovation and harm digital assets. Proposal. This, of course, is the proof, as always, because sometimes I say stuff on this channel, guys, and people go, oh, well, where's the source? We always provide a source. Everything that we say is usually data-driven, unless it's an idea of mine or a thought. Breaking big move by Binance. Binance US adds SEC enforcement co-director to its legal team. SEC asked for more time to respond to Coinbase's call for crypto clarity. The SEC regulator says it would make a recommendation within 120 days, on Coinbase's rulemaking question, but adds that the action has no merit. Unbelievable. The SEC is slimy, man. Now, obviously, yesterday, let's look at yesterday's events. We did have the CPI. The CPI came out at 4. We were very much expecting this. You guys know that we have not only expected a lower CPI print because we follow true inflationary stats, but we also expect a no hike to come. We've looked historically at the context of what the S&P, using it as an example, has done under a sideways or a pausing of rates. They may use the word skip. Now, skip gets me a little bit nervous because it implies that they're missing this one, but if they might do the next one. That's the S&P over the bloody S&P there. And that would be interesting, for sure. That would be very interesting. But we still believe that as sideways rates rolls around, the markets are going to do well. And actually look at the S&P. We have been bullied. We've got every single market right, including the altcoin market that's now above January's lows, by the way, ladies and gentlemen. It put a toe below them. Bitcoin, we got it absolutely spot on. We've got every single market right, maybe barring a slight bit of volatility in some of the altcoins. We still believe that upside is here. And actually, sideways rates are going to be a catalyst for that. We're seeing more and more central banks wind down. Of course, today, the big news is going to be the actual federal fund rate, which is coming out at 7 p.m. for me. At 1 p.m., we've got the core PMI, which is going to be interesting, another inflationary stats for production inflation, and then we've got the press conference after. So we've got the rate hike. Then Jerome Powell may come out and say, oh, well, we're going to skip this one, but we're likely going to do, we might do them intermittently or something like that. You know, he could come out and throw some spanners in the works. We will, of course, report on it tomorrow. And if you want to find out what I'm buying, where I'm buying, and what our kind of strategy is for this market, please do consider joining the Patreon. There is a link in the description. So lots going on. The rebellion is fighting back. You can see actually that we have a lot more congressional support than we once did. And there was a time not so long ago in the crypto space where to even be in this position where we were spoke about with such seriousness seemed somewhat like a pipe dream. But again, let me tell you, the entire world is going to use blockchain. We're going to use it in everyday life without even knowing we're using it. That's coming. That's on the horizon. And right now we're in a asset class that hasn't even been allowed to become it and recognized as that. When it does get recognized as it, there's a wall of money that is inevitably coming into this space that we plan on being the front runners of. On that note, as this video's gone on for 15 minutes, a little bit longer than expected. I do apologize, guys. Lots to cram into these daily market updates. I'm going to love and leave you. If you've enjoyed the content, like is appreciated, so a comment. Don't forget to subscribe, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gents. See you in the next.